Hi, everybody. Coach here. We have a red Monday. No blue wave in the market. Red wave in the market today. S&P testing critical support here. 3,400. Sitting right on a moving average. Right here is at 3,410. So we're underneath. Okay, so I was hearing myself. Took care of that. So I mean, it almost looks like we're breaking down here. The only constructive thing I could find here on some short-term stuff is that we have a little bit of divergence and the possibility of, some type of three drive here. I'll just draw the line live. Here we go. Something like this. So 3,400, 33.98 was halfway back from the COVID. So right here, I can't press it. In fact, you know what, guys? I say kind of be careful, scalp only, day trade, up until this volatility set in. And we did start off lower, but look at these swings that we've had here in the S&P, especially in NASDAQ. Look at this. All right. So, I mean, it shook out every short. Stop hunt, that's why I have my handle. It's called Forex Stop Hunter. It happens in everything. So, you have kind of light liquidity here. A lot of people sitting on their hands until we get through the election, which means they'll be sitting on their hands probably through the end of November. But you really have to reduce leverage here, reduce it and really pick your spots carefully and don't trade heavy. I mean, really, when you think about it, what if you did nothing for another week, until we have the results and things shake out? And, even if you miss big moves, we know markets don't move in straight lines and there's always retracements and corrections to enter the market. You don't have to be short from the top, long from the bottom to succeed in this. I know it's attractive to do that and I attempt it, but I miss a lot of tops and bottoms, but it doesn't mean that just because I miss a top or bottom, I'm, just not going to do the trade because I wasn't there at the beginning of it. If you could pull anywhere from a third to two-thirds out of a move, you're doing a good job. You're making money. So I never expect to get the whole ride. I'm happy pulling half of the range out of a swing move or a day trade, and I usually leave pips on the table. You have to get used to it, otherwise you're going to be relenting, reminiscing, woulda, coulda, shoulda. Friend of mine, Blake Morrill, says, I don't live in woulda, coulda, shoulda land. How many times you hear yourself say that? Anyway, so this is really the feature is we're getting a breakdown. I don't even know what the news was. I think I saw something on Twitter about China news. I don't know if it's election or they've announced that they're not going to do a stimulus deal. Anyone out there watching me want to share it in chat and help coach out with what was behind the downdraft of risk off and stock indices? Michael, if you're around listening, any of you other guys? Okay. Anyway, we're still getting divergence here on some short-term time frames, and I usually look for reversals on Tuesday, so I'm not going to try it here. It might be the right day, maybe sometime later on in the session. Pelosi and Mnuchin um, will announce some type of package. I really don't think there's going to be one until after the election. So stock indices at this point a little bit too wild for you know a senior citizen. And actually, currencies have become the ARP trade. Those of you that are in the U.S., okay, know what ARP is. It's um, what is ARP? The American Association of Retired People. So ARP is a big lobby. ARP has given approval to trade FX while the stock indices are a little too wild. This is Dale Pinkert. Keep watching the full video at TradeGATEHub.com.